First lesson, I'm going to be talking about one of the most important topics in ICT, bias. I'm going to be sharing with you the key insights that I've learned over my 9 years using logic that finally made bias click for me so it can click for you. So be sure to stick around to the end of this video because I'm going to be sharing some key insights that you're not going to want to miss out on. All right, so what is bias? Bias is literally the direction the market is most likely to move in, be it bullish, be it bearish, on the higher time frame. And now you might be thinking, okay, but how do we determine that? And that's the logic I'm going to share with you in this video. If you just continue watching, I'm going to share with you this logic of how to determine what bias is. And the funny thing is that you probably know how to find bias already, but you just don't know that you know. And I'm going to show you that you probably already know how to do this, but you just putting everything together in a way that is probably confusing you. But anyways, I digress. Now, why is bias important? Okay, bias is important because smart money operates on the higher time frame, right? So if we have a bias and we have an intended direction for where price wants to go, bias is important because it allows us as day traders to get in line with what smart money is doing so we can frame high probability trades based on a high probability narrative. As ICT likes to say, shout out to Michael, it allows us to ride the cocktails of pause. That sounds so wrong. That sounds crazy. But it allows us to ride the cocktails of smart money on a lower time frame. That is essentially the bare bones of bias and why bias is so important. How do we determine bias? And what did I mean when I said you probably already know bias, but you just don't know that you know? Okay, this is what I meant. The key to understanding bias, and I feel like also it's one of those things that is so overlooked because whenever I see a lot of people talking about bias, they always try to give you these patterns on how to do it or give you a schematic on how to find it. No, the key to understanding bias is literally understanding the logic of the concepts we're trading. And what do I mean by this? If you understand the logic of the concepts we're trading, you're able to determine what price is most likely to do next. What do I mean? Okay, for example, if price is bullish on the high time frame, right? You expect a bullish order block. Let's just draw that right here. A bullish order block here, right? To support price, right? That's the logic. The logic is that if we're bullish on the high time frame, we expect bullish order blocks to support price. And okay, how does this fall into understanding bias? If we're also bullish on the high time frame, we expect bullish fair value gaps to act as a support for price, right? And what do I mean by the logic behind these concepts, how it helps us determine bias? Okay, if we know and we believe that bullish order blocks are supposed to support price, and we know that bullish fair value gaps are supposed to support price on the high time frame, let's say we're trading, for example, right? We're anticipating a high price, so we're seeing bullish order blocks support price, and then let's say price falls short of its high time frame target and it violates a bullish order block. What do you think that's communicating to you? If price is supposed to be bullish, it should respect a bullish order block. So if price disrespects a bullish order block, that's telling you that maybe the direction of the market is not as strong as it's supposed to be. If price invalidates a bullish fair value gap on the high time frame and you're trading and you're anticipating high price, what is that telling you? Okay, that's telling you, okay, if price was bullish, it was supposed to respect this level here, but because it didn't, that might mean that price is not as bullish as we might want it to be. So do you see the logic behind anticipating what these concepts should do in real time and in price? It allows us to frame a language and a story almost of what price should be doing if it's bullish, or of what price should be doing when it's bearish. And these are the important things. This is more important than just learning a pattern, because I could easily come in here and show you, okay, if price makes a swing high, or if price is continuously violating previous day's low, that means it's bearish. No, but under what context does this fall around? What is price doing? Is price respecting these concepts, these PDRAs, so to say, or is it violating them? And then it's understanding the relationship between that's what helps you frame what is price most likely to do next. And if you can understand the logic behind this, it makes it easy to understand, okay, Price just violated this bullish order block and was supposed to be bearish. Okay, what am I going to look at? If it's violated this bullish order block, okay, what's below that? What's next to that? If it's going to go lower, it might be targeting a fair value gap below this bullish order block, a daily low below this bullish order block. And it's this logic behind the PDRAs and understanding the jobs and the roles of the PDAs. That's what gives you the language and the communication of what price is currently doing. And if you also understand this, right? This is one of the most important things I want to talk about in this video, right? The market is only ever doing two things. It's either looking for inefficiencies. These are these nice little fair value gaps, terrible drawing, I know. Or liquidity, which comes in the form of lows and highs, right? Now let's put this together. Okay, for example, let's say we see price is trading higher, price is trading higher. And then let's say we have an old high somewhere here, an old high here, right? We have this old high here, right? That's a drawn price, for example. And inside this old high here, there's might be a, let's say a bearish order block here, somewhere around here, right? And let's say price at that moment is trading right up around here. So price is trading around this level here where this bearish order block is, right? Cool. If we know that price is only ever seeking two things primarily in the market, right? We see this bearish order block. A lot of people might try to say, oh yeah, price trading back to the bearish order block short. Okay, no, just wait for more information. Okay, let's say price disrespects this bearish order block. What is that telling you? You were seeing price move higher. We've just seen it disrespect a PDRA that's supposed to act as resistance for price. What is that telling us? Okay, the current information price is telling me by it violating this bearish order block is that price is bullish. And if price is bullish right now, and remember, it only seeks liquidity or inefficiencies, there is liquidity right above this bearish order block. So what does that mean? That means right there is a high probability or high likely condition that price is going to seek that liquidity based on the information that price just gave me. And you see how I just did that by piecing all this language together. I understood the role of the order block, what it's supposed to do. And then I saw the order block, the bearish order block get disrespected. Okay, there's an old high next to the bearish order block, price is violated. Boom. That is a high probability that what? Price is going to reach for that high. Okay, and here's where it gets exciting, right? The distance between where price currently was and that high there, that is all you need in order to frame buys. You don't need to know anything else. You need to know more. That distance there, because think about it, we're operating on a daily time frame here, right? That distance there could be 1 or 2 daily candles, and that's a high probability condition that you want to be in and participating in, because you're going to know for the next 2 days or for the next day there's a high likely probability that price is going to reach for that. And then that's what we then use to form our daily bias. I'm hoping it's starting to make sense and starting to click now. But it all comes down to understanding that price is only ever doing two things: seeking liquidity or inefficiencies. I'll give another example. But let's say we see price is trading downwards, right? We see price is trading downwards in a downtrend like this, yeah? And let's say there is somewhere here, there is a bullish order block, right? That's supposed to be supporting price. Of course, price has had a massive leg higher. Primarily, before this retracement, we were seeing bullish price. And let's say maybe there's an order block somewhere here, right? A bullish order block somewhere here. Remember, this is on a daily chart. If price is bullish here, what is it? It should respect this bullish fair value gap. Okay, we see price trades through this bullish fair value gap. That's information there. Maybe price is not as bullish as it should be. What's the next PDRA in line with that? There's a bullish order block. Then we can say, okay, the distance between price violating this fair value gap to this bullish order block here, it could be a day or two, maybe even 3 days. That distance there, if we can frame trades around that, 3 days worth of trading, if we can frame a bearish bias for those next 3 days until we reach another bullish PDRA, that's enough for you. That's enough for you to frame profitable trades around. And this way it gets even better now. Okay, so price trades, right? And let's say price reached this bullish order block, right? And let's say where this bullish order block is, there's an old low, right? Right here, like this, an old low here, right? We took those 3 days of trading, that was a bias, right? And then price reached this bullish order block. As price reached this bullish order block, let's say price violated this bullish order block, right? What do you think that's telling you? Based on the logic of what a bullish order block should do, that's information. Okay, what's price most likely next to do? Okay, price isn't really so, it's not really so bullish anymore. Where is price close to? Okay, it's just violated this bullish order block, there's an old daily low right here. And what do you think I'm going to say next? The magic. Price is either always seeking inefficiencies or liquidity, right? So based on the information price is just currently giving me, if price is only ever seeking inefficiencies or liquidity, there's a high likely condition that price is going to reach for the liquidity behind that low. Why? Because if it was bullish, it would have respected the bullish order block. It would have respected the bullish fair value gap and continued going higher. But no, instead, it disrespected the logic of those PDRAs. So that means that maybe price wants to seek liquidity or inefficiencies below the market. And then the distance between where price is there, those are the days we frame our bias, because we have a high probability condition. And I hope that makes sense. And I'm actually going to go into the markets live and we're going to break down the logic based on live charts. And based on the logic, now that you understand about price and bias, right, I can actually give you some patterns that I like to look for that allow me to frame bias easier, because now you understand the framework and the logic behind why it should do what it's doing. But before I move on to that, I need you guys to really understand that that's all you need when it comes to framing bias. You don't need to know when price is doing over the next fucking 3 months or what it's doing long term. You don't need to do that. And think about it. I just told you we're just framing this on a daily chart. Imagine framing this on a weekly chart now. Now you're thinking, okay, now you can just predict the next weekly candle like that. You see what I'm saying? It's just taking layers and just implementing this stuff on high time frames. The more you're going to give yourself a longer play for bias. But you don't need to know what price is doing for the next 10. No, you don't need that. You just need to know the most high probability and most likely pockets of price moves, and that's where you can ground and build your consistency in. If you can consistently do this, and it's easy and it's a lot more simple and it's a lot more digestible, because you're just using the language of the market and you're actually reacting based on the information that the market is giving you currently. It's better than having to guess outside what the market is not doing, if that makes sense. The key is knowing what price is most likely going to do next. And over the years, I've noticed a few things that allow me to know what price is most likely to reach for. And one of those things, it's so simple, and I'm literally going to give it to you right now. Pause. I'm just going to break it down for you right now. Let's just say, okay, cool. Whenever price is bullish and you see price is trending high, right? Making higher highs, higher lows, of course, classic trend, for example, right? And let's say price in this bullish move and it makes a range because it made a low here, and let's say price made a high here, right? And let's say within that range there is a fair value gap here, and let's say there's another fair value gap here, right? And you're going to see, you can literally go in your charts and see this. What I've noticed over time in my years of trading is that if price is continuously making higher highs and higher lows, right, and creating new ranges, whenever price makes a swing high like this and there is a bullish fair value gap near it, there's a high likely chance that price is going to seek that internal fair value gap. We're not saying price is not bullish anymore. No, that's not what we're saying. Is that what is price next like to do next? And what I found in my time trading is that whenever price does this, there's a high likely chance that price is going to join for these fair value gaps and these order blocks that I'll be forming. And that gives us a range in terms of days of, okay, if price is going to reach that, that's my bias for the next few days. And that's what I need in order to find my trades and frame a trade around. And usually you're going to be able to frame a trade from where price is currently and to that fair value gap. And you're going to see, boom, and it's going to work like clockwork. Of course, there's going to be times where it's not going to work. It might just continue. But more times than not, you're going to see whenever price starts to make a swing high after breaching, a high or breaking market structure higher and starts to trade back within the range, you're going to see it's going to start seeking these PDRAs that are within the range. And we just wait for more information. And what I usually do is I'll frame a trade from there to that fair value gap. And then I'd want to see, okay, what's price going to do now? Is it going to violate this fair value gap? Okay, then I'll start looking, what's lower? Is there another fair value gap? Okay, then that'll be my next target. Okay, if that holds, we saw that price reacted from this bullish fair value gap, made a bullish order block, and then we start thinking, okay, potentially maybe in this leg down here, coming from here, maybe there was some bearish fair value gaps made as price is coming down all the way here. and let's see, okay, prices made that swing lows, showing positive signs, then okay, start looking for price to draw to these bearish fair value gaps as price draws high, because you'll obviously have an overall direction of bullishness. So there's a high likely that price is going to be drawing into these PDRAs based on what's just happened. And you see, it's a dance between the language of what is price telling me is doing right now. Maybe it creates the swing low, but then instantly violates the bullish order block that it made. Okay, that's more information. Maybe this was just a fake out to continue going lower. Let's say it creates a bearish order block. Then now you can start eyeing, okay, maybe there's a high likely chance that this low of sell side liquidity might be in play. But if it continues going higher, then trades through these bearish fair value gaps, then we can start, okay, maybe the bullishness is back on, and maybe the next likely draw could be this old high here. And if you see that the bearish order block that's forming from this old high is violated, then there's now a high likely probability that this high is going to be the next target. And it's just working within these pockets of price action, guys. I promise you, once you start implementing this and you actually go back and look at your chart, and you're going to see it's a language between the concepts. It's a language that's communicating to us what price is doing and what price is most likely going to do. And if we can just stay within these pockets, we're able to frame really high probability trades on the lower time frame with a great degree of certainty of what price is most likely going to do next. Now, let me just break down literally an example of gold and of what I was literally looking at and thinking about based on this logic here. And if it plays out, it plays out. If it doesn't, it doesn't. But I'm just going to give you the logic based on everything I've just shared with you on this bias topic, guys. All right, shit. Looks like gold has kind of already done what I was expecting it to do as I was going to give you this analysis. But anyways, that's besides the point, because I can give you maybe a longer play in terms of analysis. So as you can see here, yeah, gold was overall bullish, right? And we see here, gold made a swing high here. Made a swing high. What was this? There was a fair value gap here and an order block here. You see, price reached into that. So in that day, once you saw that swing high form, that could have been your bias for the next day to go short. We saw gold violate this bullish order block here. So as price is going high here, we saw gold literally violate this bullish order block. And what happened next, guys? Look at this. It violated this bullish order block by violating the 50% off that bullish order block here, right? This candle here. And look what happened next here. Price traded lower and attacked what? The sell side liquidity. Exactly what I was just talking to you guys about, right? When I was looking at the sell side liquidity and what happened, price immediately started making a swing high, didn't make a bullish order block, proceeded to trade higher into what? Into a bearish fair value gap here. And what happened? Price traded into the bearish fair value gap, respected it. So if price was bearish here, right? If price was bearish here, this would have been enough for it to retrade back into this bearish fair value gap here. It would have been enough for it to trade back in there and continue lower. But what did it do? It came back, and then instead of now attacking these lows and making new lower lows, it decided to make a swing high, creating a bullish order block here. So what is that telling me? Okay, if it was bearish, it should have respected this and continued lower, and then we could have possibly looked for liquidity here and these fair value gaps here as price was trading lower, right? But no, instead it rejected this whole idea of this bearish fair value gap working, violated it, created a bullish order block here, and on this turning point I'm thinking, okay, cool, price, remember, is either seeking liquidity or inefficiency. What's here? Liquidity, right? And what's this? A bearish fair value gap. So when price was here, there was a high likely probability that it was going to reach for these old highs here in terms of liquidity and this bearish fair value gap here in terms of inefficiency. Simply because when it was bearish, it should have been respecting these PDAs, but no, instead it disrespected. So now going forward, what am I going to look for? Okay, there was of course a market structure shift here. So I'm going to see how is price going to react within this fair value gap. If price completely exceeds this fair value gap and trades into this bullish order block, I'm going to see, okay, is price going to respect this order block and make a swing high and trade lower? If it does respect this, right, this order block here, and makes a swing high to trade lower, what am I going to be looking for? Maybe price was just trading back into range to then trade lower. And let's say price starts to retrace, then I'm going to be looking at this bullish fair value gap as a potential target. And then from that swing high being made and the distance between that and this bullish fair value gap is going to be the range I'll be working within for a bias of bearishness. So do you get how I'm playing within understanding the language of the concepts and what they're supposed to do at certain times when they should do them? And if they're unable to fulfill their roles and jobs, it gives me information of what price is most likely going to do next, and then I'll use that in order to frame my bias. And if you can just simply ask yourself, okay, where's price at currently? Okay, where's it come from? What's price reaching for? What is price most likely to do next? If you can ask yourself those questions as you're analyzing and as you're breaking down the logic behind what price is doing, you'll see you're going to be able to frame bias so much fucking easier. And I promise you, that's all you need to be able to understand bias and be able to start forming bias. And at first, when you start doing it, it's going to feel a bit uneasy if you haven't been doing it this way, but you're going to grow your confidence in it as you see it happen over and over and over again. And remember, the market is only ever seeking two things: liquidity or inefficiency. So I hope you guys found value in this video. If you did, leave a like, comment below, let me know what you find insightful. This is the first video of this series of 9 years of ICT 25 days of Christmas special, where every day I'm going to be posting a video related to ICT concepts and just how I use them in my years of trading. I'll see you guys in the next video tomorrow.